Welcome to Fun Day Insights, the show where we break down the stock market's wildest stories, so you don't have to Google, what even is EBITDA? Today, we're talking about a company that's turning heads faster than an NVIDIA earnings call, Nebius Group, ticker NBIS. And with me, as always, is our resident analyst and spreadsheet therapist, Maddie.
Hey there. Always happy to be your friendly neighborhood number nerd. And yeah, Nebius is the new kid on the AI block. Imagine a data center version of a gym bro that just discovered protein powder.
So, Maddie, who exactly is Nebius? Are they selling GPUs, clouds, or dreams?
All of the above, really. Nebius Group NV is a Netherlands-based AI infrastructure company. Basically, they build and operate GPU-powered data centers. Their business is renting out compute muscle to companies that need to train and deploy large AI models. Think of it as AWS for GPUs, but with slightly fewer customer tiers over surprise cloud bills.
So they're selling computing horsepower to the AI gold rush miners.
Exactly. If AI is the gold rush, Nebius is selling the shovels, or in this case, the H100s.
All right, let's talk numbers. How's the stock looking this week?
As of November 11th, Nebius is trading around $110 to $116 a share, with a market cap floating near $27 billion. It's at quite a ride, from around $17 earlier this year to over $100 now. That's not a stock chart. That's a ski jump in reverse.
So investors basically said to the moon and forgot about gravity for a while.
Pretty much. But hey, that's what multi-billion-dollar Microsoft contracts will do to a company's valuation.
Speaking of which, what's with all the hype? Why is Nebius suddenly everyone's favorite AI crush?
Well, Nebius landed two monster deals. First, a $17.4 billion contract with Microsoft for GPU capacity. That's like locking in a decade's worth of gym memberships before prices go up. And just this week, they announced a $3 billion deal with Meta to supply AI infrastructure. So yeah, the company basically became the arms dealer for Silicon Valley's AI war.
Microsoft and Meta. That's like getting both Batman and Iron Man on your client list.
Exactly. It's the kind of validation startups dream about, and the kind of expense accountants have nightmares about.
Okay, let's dig into the money side. Are they actually profitable or just really good at press releases?
Good question. In Q3 2025, they reported $146 million in revenue, up 355% year over year. That's insane growth. But they're still running a net loss thanks to massive capital spending. Their cash burn looks like a flamethrower at a marshmallow roast.
So it's one of those we're losing money, but it's strategic situations?
Exactly. They're spending billions building out GPU farms, but with Microsoft and Meta contracts in hand, that burn might just pay off if they execute.
For all the chart junkies out there, what's the technical setup?
The TOX 52-week range is wild, $17 to $141. Right now, support seems to be around $90 to $105, and resistance near $120 to $140.
What's Wall Street saying? Cheers or jeers?
Mixed bag. Some analysts upgraded the stock after those big deals, calling it a long-term AI infrastructure leader. Others worry about dilution from Nebius's capital raises and ballooning debt. Basically, half the street says, buy the future, and the other half says, check the balance sheet first.
Ah, the classic tug of war, optimism versus math.
Exactly. One side's got stars in their eyes, the other's got spreadsheets.
All right, Maddie, bottom line this for us. Bullish, bearish, or buy a stress ball?
Somewhere between bullish long-term and buy antacids short-term. Here's the deal. Nebius has massive growth potential, real contracts, real demand, and a booming AI market. But the road ahead is paved with high costs, dilution risk, and execution pressure. So if you're a long-term believer in AI infrastructure, it's a compelling story. If you're looking for quick gains, buckle up. This ride makes SpaceX look calm.
Beautifully said. So long-term vision, short-term turbulence. The airline analogy writes itself.
Exactly. Except in this case, the turbulence is the investment strategy.
That's all for today's Fond Date Insights. Remember, folks, this isn't financial advice, just mildly entertaining market therapy. Catch us next week when Maddie explains about next stock. Till then, take care of yourself, Bye-bye and keep investing.